So we got Taiwan Semiconductor up 4% today, and their announcement was real positive because the earnings growth, the revenue growth was really high, and their free cash flow is very, very good. These guys generate a lot of free cash flow and it's growing. This is in the Taiwanese currency. So I'll just kind of show that here, but then I'm going to go to a translator in a bit. And their gross margins are fairly good. This is a foundry. They don't control the IP, but even though they don't have the IP, they still have good margins. The volumes are just huge. When you go to stock analysis and you go to statistics, stock analysis converts everything to US dollars, making it easy on me. So the balance sheet, they've got almost $74 billion in cash and about $30 billion in debt. So much more cash than debt, showing that this is a very valuable business that generates a lot of cash and has just the ability to really store up cash, pay off debts, acquire companies, invest in their business, like the CapEx they're investing to make their foundries bigger. They have the cash to do that. They don't have to take loans to do that. Cash flow wise, free cash flow of 26 billion. They are putting a lot of money back into the business, which is a good thing, making themselves bigger. Now, I've owned TSM in the past. I've owned them for multiple years. I did really well with them. And I sold the stock. I just thought that the stock got too expensive. Analysts believe that the stock is a good buy, a strong buy by many analysts, but it's only discounted by about 6%. So it's not a big discount. And only 4 analysts cover it, which is a bit surprising. This is a huge company. More analysts should be covering it. And they are in agreement that it's a buy. We look at their growth. Here's the cyclical nature of this industry. You have boom periods, and it looks like their growth looks really good. It's going to slow down to the point of the business is going to contract in roughly 2 years. So that's one thing to be aware of in the semiconductor space is you have cyclical cycles in semiconductor. We have earnings per share is going to expand and then contract in 2027. And this year may be closer than we think because I think it's going to be pulled in. The forward PE is really, really high. The current PE is 155. 2025 is expected to drop to 120, 101 in 2026, which is really high. It's just going to stay really high. So to me, this stock's just too expensive. It's gotten way too expensive. I sold this stock some time ago because it had just gotten too expensive. And I actually sold it like around here. And I did well with it. And then the stock went down. But more recently, it's really rallied. And good for investors. This thing's really worked for the past year. It's up almost 113%. Looks good. And the analysts like it. They just also agree that it's either fairly priced or, of course, close to being fairly priced. So TSM led the market, the semiconductor space, to higher levels. And I think some stocks really flourished, like Broadcom went up today, and a couple of others. One that went up was Lam Research. Lam Research provides, they're also part of the semiconductor space, and they provide a lot of the materials that semiconductor foundries and makers of chips will buy from Lam Research. And they went up about 4%. Based on how well TSM is doing, it's expected that Lam Research is also going to do really well. It's a stock that we've been covering on my channel on weekends with the investors. And it's a stock that came up out of that, some stock screens. And it was good enough where I valued it. It looked great. So I started investing in it. And I've been doing well with this stock. It's been going up nicely. Year to date's up almost 10%. But this is a really nice stock. When I look at the stock, I'll show you my valuation, and then I'll show you what analysts are saying about it. Hey, Mike, good to see you. Looks like you're mad about Lam Research. It's gone up too fast. Yeah, sometimes it's too much of a good thing when a stock goes up too fast because we want to buy it at good prices, but it is good news that it's going up. So I started looking at this with the community in the November timeframe, and it was nicely discounted at that time. And this takes into account the current stock price. I still think it's discounted by 43%. So I've been buying into it. Even though it's been going up, I still buy into it. And I think it's 43% discounted. It's a good stock. It's growing its revenue. Now let's take a look at what other analysts have to say. So this is a big market. Well, compared to Nvidia, it's quite small, but it's $102 billion market cap, 15.5 billion in revenue. PEs, 25 is I guess average, but the average is a little high. And then forward PE is 22, much lower than we just saw with TSM. Analysts think it's discounted by 20%. I'm at a higher discount than that because I look at free cash flows and they primarily look at earnings per share. Now, what I liked about Lam Research is you see the cyclical nature of the business, and it has been contracting for 2024. That fiscal year ended June 30th, 2024. When we look at the quarterly, you can see that they're beginning to grow their business the last 2 quarters. So they've made the turn to the positive. And today is a little more evidence that, yeah, their business is probably going to do well for the next 2 to 3 years. Now, in semiconductor, I don't plan to stay in Lam Research for the next 20 years. I'm probably going to ride the stock up for maybe 2 years and then get out, and then either wait for the next semiconductor stock to buy into, buy it at the right time. I've done that with TSM. I tripled my money, got out. Did that with Broadcom, made money, got out. Now I'm building positions in Qualcomm and Lam Research, trying to do the same thing because semiconductor stocks tend to do that. This stock in particular has had its ups and downs, had a nice rise, a drop, rise, drop, and I've been buying around this period. I think it's going to continue to rise. For the 1 year, it's only 4%, but really when we look at the year to date, especially, it's up 10%. So hopefully it keeps rising and it keeps going. The forecast from analysts, 19 analysts are included in this price target average. Some analysts think it's going to go up nicely to $120 per share, probably around the valuation I have for the company. And then the worst case scenario is 78, which isn't too bad. So it looks pretty favorable. Looking at the revenue projections, the company's going to continue to grow their revenues. We're in the fiscal year 2025. It's going to end June 30th of this year. And each year, the company's going to grow nicely. 18.6% this year, 12% next year, 10%, and then 8.6%. That's good growth. And their earnings per share is going to expand nicely. Those are really good fundamentals. I like what I'm seeing. Like it so much, I bought the stock. So it was really good to work as a community, kind of look at semiconductor, try to find semiconductor that was discounted. And I forgot the company that we were comparing against Lam Research, but this ended up being what I thought was like the better of the 2 stocks, and I went with this one. I'm glad I did so. It's a good stock. We keep buying into it. I'd like to build it up, and I dollar cost average my purchases of stocks. So it does make it a little tough when the stock rises, but I'm just going to keep buying shares. Even though it's going up, I'm going to keep buying shares. If it goes down, I buy shares. I really want to build up a position in Lam Research. The stock that I've been building up a position on, and so far so good, is Qualcomm. And this is a solid company. It hasn't gone up, to the stratosphere with Broadcom or Nvidia, but I've known this company for a long time. It's a good, revenue size company, 39 billion. And their PE is 18, which is much lower than any of the other stocks we'll look at. If you look at TSM, it's up at 24, but we saw when we translate this, the PEs were really high. And then Nvidia is at 52, Lam Research 25, and Qualcomm is at 18. So this is the lowest in its class, and it's a good company. Analysts believe it's discounted. I'll show you the discount that I have as well. And similar to Lam Research, when I look at the growth of the company, especially in the quarterly, they're really beginning to accelerate their growth. So I'm seeing that this business is beginning to pick up. And as the market realizes, hey, these guys are growing, they have great margins because Qualcomm does design their chips, and they're able to operate with good margins, very good cash flow, consistent and growing cash flow. So the cash flow is where I get most of my value for Qualcomm. It's been growing. It looks good. And when I do my valuation on Qualcomm, I still have a 61% discount, even though the stock's been rising a little bit. So this one's been easier to buy into because it hasn't been going crazy, but I do have a good feeling about this based on its fundamentals. I think this stock's going to do well in 2025. It's been sold off. And I think their fundamentals look good. Their revenue's rising. They're making money, free cash flow. And their Snapdragon chip continues to find new places to be used. So a lot of devices are using the Snapdragon chipset from Qualcomm, as well as a lot of the wireless devices. A lot of the smartphones use Qualcomm technology. And last, Qualcomm has a big defense business where they sell to the defense departments. They sell a lot of communications, a lot of stuff that is classified and made for the armed forces. So they have a really solid business, and I like Qualcomm. So we went over TSM, Lam Research, and we can't cover semiconductor without looking at the GOAT, the greatest of all time semiconductor company, Nvidia. For some reason, it dropped a little today, which caught me by surprise. I thought they would have gone up with TSM, but they dropped a little bit. And when we look at Nvidia, it's a great company, but the stock, if we look at last 7 months, it hasn't really been doing much. It's down 1.5% from its peak back on June 18th to now. So that's 7 months. At that rate, it's going to go from being one of the shining stars on Wall Street to it's not appreciating anymore. And I wonder what stockholders are thinking to themselves now. Do they sell? Do they take gains? Do they wait around for a while longer? I mean, that's 7 months. We'll see. On a day like this, I am really surprised that the stock did not rally. If TSM showed good numbers, why didn't Nvidia rally? That's a big surprise. Frankly, I cannot explain why it went down. I would have expected it would have gone up. Nvidia is, a great company. It does have a high PE, but when you look at their fundamentals, especially their growth rate, just incredible. They're a big company and they grew this fast because their GPUs are in high demand. So good for them. Good for them. You see the cyclical nature of their business, slowdowns. And the reason I point that out is at some point, this business is going to slow down. It's still a cyclical company. It looks like, Brad, you have a question. So, Mike, you're going to get NVIDIA around 70. I will join you. NVIDIA drops to 70. I will join you buying NVIDIA. And what's my thought on AMD? Let's cover AMD. So I don't like it for a reason. It's not just emotion. It's not because I don't like their logo or something silly like that. I don't like their cash flow. Let's take a look. So AMD has been around for a long time. These guys, in a way, have been a big success story. I mean, they're $192 billion in market cap. That's great. Revenue is $24 billion. Their PE is really high, 105, and then it's going to drop down to 26. Analysts think it's really discounted. Now the stock, look at the 1 year, down 19%, while a lot of semiconductor stocks are just flourishing. So what's wrong with Nvidia? AMD. Let's take a close look. So we see that their revenue looks good. They've been growing over the last 5 quarters. Trailing 12 months, 10% growth. That's very good. Where my valuation of AMD falls down is on this line. They just can't consistently generate free cash flows. Free cash flows are one of the main valuation techniques I have on stocks, especially semiconductors. These guys don't generate free cash flow. I showed you Qualcomm. They were generating 11 billion of free cash flow. These guys, 1.5. So this is where AMD either becomes undesirable or isn't desirable to me, is because they just don't generate free cash flow. And their business has been this way for a long time. I've been following AMD for a long time, and I've never been impressed with their free cash flow. And that's why I don't invest in AMD. At the same time, I mean, during this time, I invested in TSM during this period of time. Then I invested in Broadcom, much better cash flow. Now I'm investing in Lam Research and Qualcomm. So that's why I don't invest in AMD. That's my one critique of AMD, is their cash flow, just not very good. Now their earnings per share is going to look good. When you look at earnings per share, some analysts are going to say, hey, it's severely discounted. This analyst has a price target of 265 and the current share price is 118. Analysts think that based on earnings per share, it's discounted by almost 56%. And that's earnings per share. The company is going to grow revenues well. So that looks good. Earnings per share is going to look good. And they're going to grow their earnings per share. But I don't think I'm the only one who uses free cash flow as a valuation method. This chart should show that, hey, other investors use it too. So I'm not a buyer of AMD for that reason, is their cash flow. There's other options for me in semiconductor to buy companies that I just think are more desirable, more valuable based on their free cash flow and their other fundamentals. And that's my opinion on AMD. So we really took a nice ride through semiconductor, going through TSM, Nvidia, Lam Research, Qualcomm, and AMD.